See my PowerPoint?
Yes.
Yes.
Okay.
Yeah, Ricardo, the floor is yours.
Okay, thank you. So my name is Ricardo, and I'm joined with Ashwin. I wanted to tell you first three little stories about when you look through the Eurostat's database on financial accounts, the data set with a breakdown by country, and you're looking through all these sectors. You know the assets of the sectors, and this is this chart shows the assets in terms of sector assets in terms of GDP as percentage of GDP. But when you're looking through this file or this data set, you can't but notice that Luxembourg is, in most cases, has by far the largest assets in terms of GDP. So for the total economy, for example, and all the main sectors, except for the pension and general government, which I will show in the next slide, Luxembourg has, can we go back to the previous one? Okay, Luxembourg has the largest assets. So the green line in all of those charts is Luxembourg. So for the banking sector, for example, and financial intermediaries and central bank, the assets are about 3 to 5 times larger than the other group of countries. But when it comes to non-financial corporations, Luxembourg has historically been on top with the largest percentage of assets. But you can see it's the middle one on top. You can see that Ireland has been catching up to Luxembourg and is a bit higher in Luxembourg in 2019. And you can see down below, the lines below are Belgium and the Netherlands. I think there are some call-outs missing, which should name the lines, but okay, that's okay. So let's go to the next one. Okay, here we go. So what's different with the pension sector? So the pension fund sector is a bit different from other sectors. You can see that even though Luxembourg is standing out in other sectors, they are not visible in this chart. And I should point out here that the data was not available for the pension fund sector for all European countries. So, for example, Spain, Portugal, and France are not in this chart. So, for pension fund assets in terms of percentage of GDP, the largest one is the Netherlands, following by Sweden and Denmark. So this is quite interesting. Why is such a big difference between all those countries, all the group of countries, and those three? Those are not the most populated countries in Europe, but they do have something in common, which is they have one of the best pension systems in the world, and their pension system is considered to be quite good and sustainable. But not all countries do have sustainable pension systems, but these do have that in common. So, for example, in the Netherlands, you can expect to get between 75 to 80% of your last earned income when you retire. Okay, so let's go to the next one. Another interesting one is, that actually stands out when you look through that data set is Norway. Sorry. Okay, so the general government in Norway has some substantial assets, which is explained by the Norwegian Petroleum Fund. The Petroleum Fund is in the national accounts is classified under the central government sector. So the size of the fund in 2020 was about 3 times the GDP of Norway. or 11 trillion Norwegian kroners, which is about 1.2 trillion US dollars. So, including that in your general government sector, blows it up quite substantially. Okay, and the next one, Ashwin. So shifting gear a little bit now and turning the focus to Portugal. This slide is missing the heading, but it should show us the net lending, net borrowing by institutional sectors in Portugal. So in 2020, the net lending in the Portuguese economy stood around 0.1% of GDP. But compared to 2019, the net lending of the Portuguese economy has decreased by 1.1%. And this reduction mainly reflects a decline in central government balance by 5.8% and the increase in the net lending of households. But there was also a decrease in net lending of financial corporations, justified by a small amount, and the reduction in net borrowing of financial corporations by 0.5 percentage point. Okay, I don't think I have more time to discuss this one, so over to you, Ashwin.
Okay, thank you, Ricardo. So from this flow of funds, it is clear that households were the main financial lenders of financial corporations in both 2019 and 2020. And in 2020, households also financed the general governments and the rest of the world. The rest of the world financed mainly non-financial corporations in Portugal. In comparison with 2019, we had these major changes stand out in the flows of intersector financing. First, net financing of financial corporations to general government increased in 2020. And we can consider the general government sector as a net borrowing sector in this case. Second, non-financial corporations in 2019 were financed by general governments, but in 2020, it financed by households and financing the general government. That could be because of COVID-19 pandemics. So here we have this Excel file. I don't know if you can see the Excel file or no. Is it shared?
We can see it, yes.
Yeah, okay, yeah. Okay. So here we can see the financial accounts, the asset part and the liability part. So this is the total in transaction, and it is in million euros. And here we can see the liability. And here we can see the net financial assets and financial saving in the percentage of the GDP. But the interactive part is this part that is for Portugal National Financial Accounts, the non-financial corporation. So we have the transactions in the annual timeline. So here we can see that we have the data from 1995 to 2020. And if we check the different parts of this, for example, for debt securities, we can see that the situation after 2019 and the start of the COVID-19 is something different. So we have some fluctuations before this date, but after this, the situation would be completely different in many cases. If we go, for example, for the asset and liabilities for the loans, here we can see that it is fluctuated a lot before 2019, but it converged through the 2019. But here we can see that they are going to be separated again. And also we can check it with the this part of the equity and investment. That we can consider this part also have some effect because of the COVID-19. And here we can see that we have this effect completely in increasing the liabilities side and decreasing the asset side. And for the insurance companies and the pension funds.
Afshin, sorry to interrupt you, but 2 more minutes, please.
Yes, okay. So here we can see that for insurance companies, they are converging after 2019, but we have some insight about this section in the rest of the slides that we can show that we would face with some differences here. Okay, so here we focus on the sector F6, that it's for the insurance companies and the pension funds, and we calculate the prediction of the life tables and annuity of Denmark, Portugal, USA, and France as representative of 14 European countries plus USA. The clustering here that you are seeing is based on similarities in life tables. These graphs show that the mortality and life expectancy decomposition are almost the same in representative countries. And here we choose Portugal to present the results of mortality model that we fit to capture age and period effects and the changes in life annuity. It is important to forecast the future changes in the value added of this section. So this is a clear change in the level of between 2012 and 2013 in this sector. And if we look at the composition of this sector, we can see a change in volume. And this change of this sector was noticeable in Portugal after 2013, and it make it much more important than the other sectors. So as we can see, before COVID-19, mortality is decreasing till 72 years old. So we can have it here. And then constant till 80, and then increasing dramatically after age 80. So we have Power BI file here that you can see why this is important for the economy, because the life expectancy in many of the countries are increasing dramatically, especially in Portugal. And it is now something over 80. So the average is something over 80. Okay. So here, the life expectancy would not increase anymore because of the COVID-19, and also the risk ages of the COVID belongs to these categories. So we can see a dramatic drop in the forecast line by our time series model after 2020. It means more mortality for elderlies could change the expected trajectory for the evolution, the advanced ages mortality. In general terms, the rate of mortality is increasing, and this evidences of structural changes recommend a structural change in the normal trend of national accounts from 20 years ago till now for the sector F9. So it could be very important to monitor this sector in the future to see that how these changes will affect the national account. And here we can see that after COVID-19, the situation is completely changed. This data is not available here, now, but we forecast it with the models. And the conclusions, the long-term debt securities outstanding amounts, most of long-term debt securities issued by non-financial corporations would be held by insurance. And the investment from the insurance companies and pension funds in debt securities issued by non-residents will increase significantly. We anticipate it. Relatively to other monetary and financial institutions, we could expect the increase in net assets resulted essentially from the amortization of liabilities of pension funds and life insurance companies. We can expect it. And the last but not the least, significant increase in the percent of total value added of sector F6, namely insurance, pension, and standardized guarantee schemes in the next year. So we can expect that this sector change the place in the future and in the recent years. And also here we have the trade, transportation and hospitality that we talked about it in the first session of our talk. So these two sectors were
You really have to
studied. Yeah. Thank you.
Okay. Thank you for the presentation. I think it is very interesting, and you covered quite different aspects of financial accounts.